Hello, everybody. I hope you can hear me well. So I'm kicking off this new section, which is about how to balance regulation with decentralization. So can you hear me? Yes?
Yes, you're loud and clear.
Thank you very much. Sorry for that. So I'm Hassan El Bakkal. I'm the CEO and founder of TheGallery, which is a digital art place dedicated to photography. I'm also the CEO of Ceres Advisory, which is a consulting company dedicated to blockchain and Web3. And I will leave the floor to my partners to introduce themselves. Maybe ladies first, if I may.
All right. Hello, everyone. My name is Marina Khaustova. I'm CEO of Crystal Blockchain. We are a blockchain analytics company. We are based in Netherlands, UK, United States, and Ukraine. And we are delivering compliance solutions for those who are dealing with crypto and investigative and forensic software to those who are investigating actually cryptocurrency and related cases, including various kind of illicit activities or money laundering. Passing my words to the next speaker here.
Hi, thanks, Marina. I'm Charmaine Short. I'm working for a DeFi payments company called Finality International, which is building wholesale banking solutions for financial institutions to let them have tokenized peer-to-peer markets using distributed ledger technology. So obviously I'm very interested today because banking and CHAPS payments are very highly regulated area. So Finality are working with regulators to provide a 24/7 on-chain alternative to CHAPS for high-value payments between banks using Swift and the Ethereum blockchain. I'll pass over to Greg.
Afternoon, everybody. I'm calling in from the Crypto Valley Association gathering, so if it's a little bit loud around me, my apologies. I'm the CEO and founder of QPQ. We're building the infrastructure to make blockchain actually deliver upon all of the promises that have been made for many years but not fulfilled. It's interoperable, high speed, all of it decentralized consensus, no batching, no third-party bridges, actually delivering the operational aim of distributed technology, which is to enable us to trust the message, not the messenger, securely at scale. There's a lot more to come than we have pushed out to date, but I've been engaging with regulators in this space for 21 years now, and I've been making the same points over and over again, so this is going to be an interesting panel for me to hear how other perspectives come to bear. I think when we think about the regulatory frameworks, actually there's not a lot wrong necessarily with the regulatory frameworks. It's that we're talking about a different type of asset in some cases. So I'm not one of those people who thinks that all of the cryptographic assets are assets at all. But I do think that as we talk about the digitalization of the assets we take for granted in our day-to-day lives, everything from music collections, CD collections, DVD collections, etc. Once they digitalize, they will naturally financialize. And what needs to happen is the regulators need to move to thinking about a new type of approach that understands the inevitability of this and stops trying to fit those types of assets into a securities framework. So that's my introduction and my opening play for the conversation too.
Thank you for that, Greg. My name is Salman Halawi. I am an entrepreneur, futurist, and keynote speaker and founder of a Web3-based services marketplace called Metadesignerz, which is aimed at connecting brands with trusted Web3 service providers. Apart from that, I am part of the Youth Advisory Board for the United Nations Development Program here in Lebanon. And I'm just very happy to be part of this conversation. Let's go ahead and kick off. Back to you, Hassan.
Thank you very much. Thank you. So a great panel indeed. Maybe just to kick off on a very generic, I would say, statement, the the team were asking me, okay, hey Hassan, why actually do you want to participate to this panel, and what would be, I would say, you kind of generic statement about that? Maybe I think I might just push it to you, and that might kick off the different ideas. So for me, this subject resonates a lot because on day-to-day basis we work with customers. We know we are a consulting company. We have bankers, insurer. We have companies working on the industry, retailers, and we always have to deal between regulation and especially when looking at Web3, the balance between regulation and decentralization. Yes, it's not an easy task, yet from my point of view, it is crucial, really crucial, to foster an ecosystem where users could feel confident that they can use decentralized solution in a safe and protected way. Because we like it or not, user being a big corporation or being the last, I would say, an end user, there is no usage without trust. If you don't trust a solution, you are not going to use it. So we have now in Europe MiCA, which is a framework which is being imposed. However, we do see that currently at least actors in our European ecosystem, they have with confidence capabilities to build solutions which are future proof without fearing that they will be pushed back later on by users or authorities. So from a general point of view, I would like to just kick off saying that I believe that yes, it is not easy, but we need to have the right balance between the two. And I personally see it more as a positive leverage to have regulation, and maybe even a nice positive tool to get the usage on decentralized solutions for big corporations, but also end users.
Yeah, thanks for that, Hassan. That's very good. So I think there's been a lot of different pros and cons of DeFi systems. I don't know what everyone else thinks, but one of the sort of pluses is that it enables new entrants into the sort of traditional ecosystems like banking, and we can enable faster, cheaper, more reliable solutions using blockchain. We can cut out middlemen, we can have peer-to-peer markets, and there's also a lot of innovation that's not being stifled at the moment because there's lots of new solutions coming on board. But I suppose some of the drawbacks or the cons of DeFi is that there's no protection for the public or individuals if they're investing in these tokenized assets and it all goes horribly wrong. We're hearing about these all the time, and last year was particularly bad for scandals and scams and tokens like that. So I think that's one of the bad things about DeFi, is that there is a need, if we want to gain people's trust for the mass adoption, then we're going to have to bring in some sort of regulation. Don't know what anyone else thinks.
I don't think we necessarily need regulation. We need regulators to wake up and understand there's a difference between an asset and a cryptographic betting slip. So much of what has gone wrong was so predictable. I've been calling out exchanges that aren't regulated as exchanges but claim to be exchanges, and actually they have no regulation whatsoever, or very little, or the regulatory cover they have is anecdotal to what they actually do, and yet they get away with calling themselves exchanges. That was a predictable fail for a very long time. We see the same thing, I think, with third-party bridges. In actual fact, you're a payment services provider, so be regulated as such, or accept that you're not actually a secure service provider. You are not a decentralized operation. You are a centralized operation. We must therefore trust you. If we trust you, we need to have you regulated. The same with batching and layer 2s. If you're batching transactions, then you should at least be a new money institution in terms of regulation. This is my point. I think the existing frameworks are there to cover much of what is problematic. the problems are that actually regulators haven't been consistent on this. They've allowed people to declare that they are, in fact, exchanges when they're not. Last year, Binance announced that they had been fully regulated as an exchange in France, but in actual fact, what they had achieved was a virtual asset service provider registration. That is not the same thing as being a fully regulated multilateral trading facility. The industry itself is the problem. The industry is too fond of lying and being paid for those lies. What has to happen is some actual honesty, some real transparency for people to dig in and say, well, this is what we actually do, and this is how we're going to do it, and this is the aspect of what we're doing that is going to be centralized. That aspect should be regulated. How can we put that under regulatory auspices? But what I was talking about at the outset of this is quite a different thing. I was talking about the everyday assets that we have around us. My daughter's paintings, my son's finger paintings that are on the fridge. These are everyday assets, but if they were to become considered to be art by somebody, they might have a value. That value might lead to trading in those things. And that is the financialization of an everyday asset. And that's something we need to do. Now, in this context, actually, the bigger problem is not necessarily that regulators are trying to force those into the straitjacket of being a securities token or a security in the context, which they have been doing, particularly in the US. Rather, it's actually that there is a degree of reason for why regulators have a sort of, what you might call a patriarchal oversight for consumer utilization and engagement with assets in the market, and it's that they think that consumers are not particularly discerning, that they can be easily deceived, and so on. And actually, everything that's happened in the context of people investing in spurious betting, cryptographic betting slips, non-existent exchanges that pretend to be exchanges, only amplifies the point that the regulators have, that the average consumer is not discerning enough, is not well enough equipped to make decisions that actually lead them toward investing their money in things that are assets and understanding the difference between an asset and a cryptographic betting slip that may indeed be number go up and may indeed go to the moon, but not on the basis of any real economic features. Was it that bad?
I know you touched a lot of points, and I can echo what you have said about the trust and build up of transparency and so on. We are an analytics company, so I prefer to stick to the point where we are observing what's going on and providing this information to our customers or to to researchers so they can make right conclusions out of that. But to that, for regulators, of course, to make their decision. But to make that right, of course, they need full visibility on that. And I used to say that what has been designed transparent became, and it just too complicated right now for anyone to get through all the complexities of the multiple layers of the blockchains and multiple entities interacting with each other, or maybe even pretending to be other kinds of entities, right? So I'd say that it's not only a call for greater transparency and for the tools evolving, to actually sustain this kind of transparency and provide right optics to whoever is looking into these tools. It's also a big call for actually education of those people who are right now working on the regulation. And I can see a lot of improvement, happening on that front already. I'm in this space, in crypto space, since 2015, and the gap between where the innovation is going and how the regulators are observing that is clearly have shrinked in the latest years, but it's still existent there, and especially looking at how still decisions about the blockchain space, about the innovations are being taken in a particular countries, or in the way they wait until the market emerges or comes back or anything else. I can see that clearly there is a big need of bringing up to speed everyone about what is it that we are observing, how the technology looks like, and what are the tools and the solutions that can be utilized to monitor that. So again, differentiate when entities are pretending to be other entities, when again there are developers of certain solutions and then users of these solutions, right? I'm speaking here particularly about the case of, for example, Tornado Cash, right? And so on and so on. So it won't be happening overnight. I can clearly understand that, but with the demand, to spend much more on the compliance, to invest much more into the compliance, there's no clear, agreement or clear understanding of, how exactly, these costs are going to be distributed, and what exactly it is that, companies need to be investing into to be more and more compliant, or what exactly needs to be done on the front of developers, of any kind of innovation, including Web3, to be compliant. So I think that's the conundrum that is happening right now.
Marina, you've touched on two issues there. So one, you're talking about education, and education requires there to be a really good flow of information and the capacity to discern left and right. Put to one side the fact that I complained on Twitter the other day that I literally have no idea what the source of truth is anymore. The thing that I love about this particular conference, I was on this, I think it was late last year, it's the only one where they actually ask people to come on as experts in their field and talk freely. Everything else, it's like a series of position statements. It's not really a communication. I don't really understand the value of people standing there giving you the same speech they gave you last year. I was in a speech the other day, or talk the other day, where people were talking about tokenizing real-world assets. And I could have written everything they said in 2015 and handed it up to the audience. There was no change whatsoever. It was a series of grandstanding statements. It was absolute nonsense. But nobody challenges it. Nobody challenges it because they're hosting the event and the host doesn't want to actually ask any difficult questions. So we need more fora like this. We need to have more of these Web3 Stronger Together type forums where people are actually being asked to speak out on speak their minds, say what they think. And the hope, I think, is that people will actually start to find some useful information between us. You don't have to agree with any one of us, but I hope each of us can actually challenge some of the ways that you might see things and feel about things as it stands. The other issue that you picked up on is, again, going back to the industry itself. This point around understanding the value of a utility token, it's really blindingly simple. If the utility token cannot have its mathematical model, its economic model explained to a child, it's probably a number go up fast. If you need a mathematical degree to unpick the so-called tokenomics of a token, it is not a utility token. It is not a security token. It is a cryptographic betting slip with some spurious mathematics to support a spurious economic model.
Well, in that sense, that's also something, worth to point out, that the revolution in adoption is definitely happening, but not in the way we all have seen, 3 or 4 years ago. And, that is probably a good thing, definitely, to say. But Greg, I have a question to you. Like, do you see these kind of platforms where this communication is happening and we're talking about, what should be done and actually what can be done? Do you see these as a way of communication between the industry and the regulators? Do you see it actually being, following the goal of establishing this communication and educating and enlightening, all the sides of this conversation?
Yes and no. I mean, I don't think that the regulators really tune into these things. I've been engaging directly with regulators, as I say, for 21 years in different ways around this entire thing of the digitalization of assets. The reason that we moved QPQ to Switzerland actually is because FINRA understood what we were doing, and I spent 4 years trying to explain that to the FCA, and they never got it. And actually, one of the biggest critiques I would make of the regulators, but I would also caveat my comment with an understanding that they have limited resources and have an awful lot of calls upon those resources. When we provided information explaining very clearly how we had created complete digital assets, what we call data-rich digital assets, because remember, tokens pointed assets, they are not in of themselves assets. They have no capacity to bear the complexity of even simple as a car ownership. The car ownership is a bill of materials from when the car was manufactured. It's an export certificate, it's a bill of lading, it's an importation certificate, it's a tax certificate, it's a bill of sale, it's then an entire life cycle history for that car. We created a data structure we call a data-rich digital asset that actually combines that data with a token and allows that to move through the system so that you have real custody and real settlement. The correct terms from a regulatory perspective are that we enable finality of settlement, we create proper custodial structures, we enable segregation of accounts and segregation of assets as demonstrable technical states, which currently in a financial context, these things are all regulatory and contractual artifice. But you know, the depressing part of that is I've been explaining that very same idea and message to what was the SFA, became the FSA, and is now the FCA for what I think 19 years, and the penny just wasn't dropping. I've briefed departments and governments on these things and provided them with extensive documentation in order to make the conversation that we're going to have with them as productive as possible. And it turns out when I turn up for a 2-hour meeting block with senior government members, and this is not just in the UK, that they actually haven't read the materials and they're expecting me to present it all to them, and then they're going to walk off and there'll be no meaningful conversation. So the issues are manifold. On the one hand, I don't think regulators are really engaging as constructively as they might. On the other, the industry is behaving very poorly toward those regulators. There's an awful lot of people in our industry whose approach to the regulators is essentially, let me do as I want, or I'm going to scream like a child. And then the other part to it is that the simple lack of resources that the regulators have to really dig into these things. And then you look at the legislative agendas, we've got various people pushing certain regulatory and legislative agendas, both in the US, the UK, and by and large, they don't really understand what they're pushing. They just think that they're pushing buttons for a certain caucus of voter. As I say on Twitter, most of these people are what I call from the Gallup party. Their entire policy is driven by what their target voter group have said to a pollster. So when Mr. Trump's group says, oh, our group really like Bitcoin, he becomes a Bitcoin maximalist. You know, you see the same thing.
We see different things. But I think we see different things because indeed that's interesting to see how the SEC in the US is treating, I would say, regulation, hoping that laws which are up to 80 or 90 years old can still fit into the existing financial system. And as you said, Greg, rightfully, data structure is being much more complex than it was some decades ago, much richer, much more complete. Why? So that's one way to treat regulation. It's okay, no need to regulation because the old rules are still capable of handling the current economy and financial system. That's one extreme. The other extreme, we have seen it in Europe with MiCA, where there was very poor, indeed, discussion. Still, there was a try. It was a try to protect, I would say, a big portion, unfortunately, of the citizens which don't have financial education. We like it or not. You said it yourself, Greg, you're right. There are so bad actors in our industry trying to take advantage of poorly educated people. I'm not, to be frank, I'm not against stronger regulation to protect weakest people.
Sorry to cut in for a second, Hassan, but to augment the point you're making, it's not just that people aren't given the necessary tools, the information, the education. It's actually that there's a massive sense of economic disenfranchisement. That's what so many of these populist politicians are plugging into. It's this sense that there's a generation coming through whose greatest asset aspirations are Netflix password. That's the problem here, you know. And yes, this industry has preyed upon that failure of the economic system to produce an I win, you win, we win outcome. It's, sorry to interrupt, but it's just what you said. No, I wanted to add that flavor too.
Yeah, and I think that's indeed the point. That's adding the weak education, financial education, to the bad actors and habits that we might have seen our, I would say, industry. That's why I was saying I'm not necessarily against strong regulation to protect the weakest among us, hoping still hoping still, that's very important, what is coming next, that as we move forward, there will be a more balanced found, regulations being built in an evolutive way with people like us, people from our industry, people who knows how to take that, I would say, that industry, those solutions in the right path. I think that's what I'm asking for is, yes, I'm not against a strong regulation like it was done in Europe to protect the weakest, but now what's next? The next step should be take our hands. We will show you what is inside the decentralized solutions. It's not only the devil, it's about trust. We will tell you, we'll show you how it works, and hopefully we can find a more balanced approach and a more co-constructive way to build a more sustainable balance between those two fits. I don't know, maybe Salman, because we haven't had the opportunity to listen to you. Maybe I will pass the floor to you.
Thank you, Hassan. I just had a small question I wanted to ask you. All right, I do believe that regulation can do some very good work when it comes to the weaker part of society within this upcoming industry, this growing industry. But is regulation really enough? Or do we need to start looking at ways to educate people in a simpler manner? Because the way things are put currently and the way the industry is headed, it's smoke and mirrors. There's a lot of people saying a lot of very big buzzwords that people don't really understand. And it's just creating a smoke screen wherein the bad players are taking whatever they want. The builders are losing their place in the industry. And the entire industry is losing trust. So I feel like it's more a topic of education than regulation at this point in the industry.
Yeah, I really like your statement, Salman. However, I'm very pessimistic on that. You know, just look around us how many of our fellow network colleagues all become one of a second AI experts, posting every day on AI and the great tools they are building and so on. So unfortunately, I'm afraid we are heading toward a situation where people are trusting more machines, training machines, than their own brain. I was posting some days ago, about that I believe we are the rarest resource. And one day, if you don't train your brain and you train your AI companion, you are going to become their pet. So I believe many people around us are more focused on training their AI than their brain. So I'm unfortunately not optimistic about our capacity as humankind to become more clever.
I'm actually really optimistic about our potential for that. And I have made the point that you've just made about all the experts. I used to make that as a joke on stage. You know, if you really want to know if someone's a LinkedIn expert, they have to be an expert in these 5 subjects, and one of them is AI. These days, it's just AI. But you know, putting aside all of the vacuous talking heads, for those of us old enough, the Magnus Magnusons, or I forget the song now, but there's this talking head from the 90s in a video, one of the early music videos. Look, I don't think that AI is the threat that people think it is. I think it could actually be a great leveler. You know, I've spoken for a long time about the mission that I have in life is the economic emancipation of humanity. I don't think that jobs are necessarily a good thing. Most jobs are not. They are the least that could possibly be paid for the maximum amount of commitment. I think a future in which we contract for the USPs that we have, the unique capacities to bring creative and intellectual perspectives to problems, to ideas, to things, can actually be augmented and delivered through that AI. That we are going to see a massive increase in the productivity of people through using things like large language models to take a lot of the headache away that they would otherwise have had to have had in place. And you know, as I point out somewhat jokingly, nobody ever got up first thing in the morning and said, today I'm going to send 20 emails, I'm going to open 3 invoices, and I'm going to write 4 special letters to former clients.
But Greg,
nobody's ever
don't
done
you
that.
believe that the people who really will be augmented in a positive way by those tools are people, again, like us, which have a certain level of education, and that unfortunately 90% of the people which have been scammed, I think it was the point of Charmaine, that might be also a way to give you back the pitch. I'm afraid we are going to see those 90% of the people which got scammed by the bandits and criminals are going to be, I would say, losing benefits from AI. That's my personal opinion. Maybe Charmaine, giving you maybe the mic. What are your opinions on that?
Yeah, I mean, coming back to what was said earlier about educating people, I think it's so important, and the people that are currently disadvantaged and outside of the system of being well educated. So when we're building Web3 systems, we need to include diversity, think about inclusion, accessibility. So everybody should have like a D&I strategy to make sure that underrepresented groups are consulted when the systems are being built. You know, people from different cultures, people who speak different languages, people who maybe live in an area where you don't get good internet connection. There's all sorts of requirements we need to be thinking about so that everybody has an opportunity to succeed in this brave new Web3 world, because a lot of the systems that were built in Web2, I mean, excuse me, it's his own personal opinion, they were built by white men and they didn't really think about the requirements of any other groups. So this is our chance to actually change all that. And also, I mean, we mentioned earlier about other forums where people can talk about these things. There are lots of blockchain consortiums. Finality has a consortium, and we've got various members of, you know, coming back to regulation, coming back to tier one banks, and, you know, we're saying, you know, what do you need if you want to move your payments onto the blockchain? And we're just sort of collaborating in that way. We're working with regulators. We've been talking to the Bank of England since 2021 about what they would need, you know, if they wanted to allow their banks to make payments through the banking system that's on the blockchain rather than through SWIFT and CHAPS. And it's very complicated, and it takes a long time to bring regulation in. I mean, everybody knows regulation is really slow, but we want to get it right. I mean, there are, you know, people can still pay in Bitcoin or whatever they want, Ethereum. In fact, they'll be using the Ethereum blockchain with the finality payments. But it's all about choices, isn't it? So people can choose to stay within the mainstream systems that are regulated, or they could transact with their assets on the more sort of the wider unregulated systems. I mean, nobody's going to be prevented from, you know, transacting with the normal blockchains.
Look, you're right in saying that regulation is slow and regulatory processes and engagement is slow. But, you know, I think this has been hinted at by Salman. Certainly, Marina, I think you mentioned it, and I know, Hassan, you were touching on it as well. At the end of the day, and this whole panel is about this issue, at the end of the day, if the industry itself decides to clean up its act and behave well, if the people who are doing things the right way accentuate that in others as well, you know, we try and set an example, and we drive the standards. We say, look, governance actually matters. Having things done in the right way matters. Giving people a vote, giving people input, making it open for others to throw to build their own ideas and projects around things. All of these things around the governance really matter. Having good tokenomics matters. Having straightforward operations and offerings matters. But, you know, then having said all of that, I also think there's an interesting aspect to this, which is that actually, what is it that sets apart the digitalized assets, like my old CD collection, from securities? And actually, it's the fact that there is no governance. It is an asset in its own right because it is, if you like. What one person values it at is maybe different from another in a market that facilitates that exchange of value between two parties or more. the value of that CD collection is not driven by what the value of a third party is in terms of their operation upon that. And you see that in the context of DeFi. So the SEC ruled that staking with Ethereum was a securities activity, and they are, as they usually are on these types of things, absolutely correct. Staking in that context is a combined activity that involves governance, that involves third-party actors to drive value. And when you look at those things, I think the SEC's decision is very straightforward and on the money. And then that touches into something that I think, Hassan, you touched on earlier. Marina, you talked about it on DeFi. DeFi is not staking. DeFi is when we get to a state where, a bit like the credit unions in Ireland when they first started, it was local people lending to local people. DeFi is actually how we get to a state where somebody in Africa who wants to build a business doing something can receive investment and support and financing from somebody in Hong Kong. That's DeFi. Staking is just yet another piece of the crypto game. It's not really DeFi. DeFi is decentralized finance. It's all of us engaging and acting with one another. And again, that's where you get to a governance state being really important, where there is real clarity, transparency, that things that walk like a duck, talk like a duck, quack like a duck are a duck.
Yeah, the thing that Web3 gives us, which we didn't have in the old world, is the traceability, isn't it? So if you're buying an asset, whether it's a digital asset or a real asset, physical, you can see where it's come from. Potentially every element or material that went into its manufacture, say a car or whatever, was the materials, were they sustainably sourced, how many people have owned a vehicle before you, all this kind of thing. It can be proved through the blockchain, whereas in the past, sometimes if you were buying an asset, you don't know if it's a genuine asset, if it's like a luxury piece of jewelry or something like a Rolex watch, whereas now we've got all that on-chain journey, and I think that's really a good way to tokenize physical assets.
Yeah, so I think in this case, and I completely agree, blockchain is, it's the infrastructure on which Web3 will be built alongside AI and a lot of other technologies. I do think what we are approaching right now is a fact or a possibility that what if regulation comes from within Web3? What if we create standard forums from within Web3 that regulate the Web3 companies until governments have the time to understand, educate themselves, and have the ability to even evaluate whether what they're regulating should be regulated or not, and how to regulate it. Because, historically, we know humans tend to make a lot of mistakes. You can't trust a lot of humans with a lot of things, and we've seen that in Web3 already. So you can't rely on governance alone. Neither can you rely on what the governments want us to do and what regulators want to impose on us, because in essence, that would be removing what blockchain was created for a few years ago, what Web3 is approaching, and that is decentralization.
I like the statement that you are making, that most probably regulation by itself is not sufficient. We would all hope that we will be much more, I would say, actors in that direction and our contributions. What I love about decentralization is that you can build a business with your competitor in a trustful manner, because your data is still your data, and you can decide the way you put it in that collaboration area. That's what I found fantastic about decentralization. I'm just a bit sad that despite the, I would say, frequent crisis in trust, and despite the addition of regulations, we don't live today in a better world. We have more decentralized solutions. We have more regulation. Do we live in a better world? I don't think we do. I have two daughters. I'm not sure that we'll have a safer world tomorrow. And that's my only wish for them at the end. I don't know, Marina.
Yeah, I just was listening to you, and I also have some like sad thoughts, in my head. We are not doing good enough as an industry. That is for sure. I can see actually, to summarize, the users, the regular users, will always be making mistakes. They will always be falling for some concepts that will promise them, earning more by doing less, right? Like, it's in our nature. It couldn't be reversed by that. So regulators, of course, understand that as well. So they try to make big players, right, enforcing, these kind of rules or strictness that would not let, these big schemes to unfold and so on. And then what do these players do? They act differently. They act differently, and I don't see much unity still in these actions, these obvious actions that could be taken in the pursuance of clarity, trust, and transparency. I give you a very simple example. Right now, you all understand that we can, whenever you are sending any funds out of any exchange, right, you're inputting the address. How much would it cost for an exchange to just immediately verify if this address belongs to some absolutely known criminal? How much would it take? Like cents, even less than that, because there might be millions and millions of this going on the long term. So the cost for that might really drop very low. But that would prevent so much this occasional distribution of funds. People would actually know that this transaction is about to happen, and the recipient might be a bad actor, it might be a criminal, it might be a scammer. They don't do this. I mean, few of them started doing this, but very recently. And this is itself, is a very there are many of examples like that. I think there is really, I understand it is a crypto winter and it's a tough times for like anyone in this space. And it's really hard to innovate, and bring something new when the space is, in such state as it is right now, also understanding the financial crisis around the world. But, again, maybe the crisis is the time when there could be unity and unified action, to support the protection of this space, to bring, again, more trust to that.
I don't know that you can. I mean, I think we'd all identify with the point that there is a generation coming through now. I have 5 children, between 4 and 14, and I think for all of them, the world in which they will emerge, as I did as a young teenager into the working and third-level educational world, is completely transformed. The basics like freedom of speech have been greatly eradicated, even in Western countries. But the core point that we have left, I mean, I flippantly repeated the joke I heard a little while ago about the only asset this generation are ever going to have is their Netflix password, is actually on point. The majority of people are never going to be able to afford a house or a car outright. No outright purchase. Even mortgages are going to be so expensive. With a bubble of everything has priced people out of all sorts of different types of assets, and generations that follow more than the ones that have gone before. But fundamentally, the difference between Web 2 and Web 3 is this. Web 2 is an environment in which everything seems to be free because you're the product. Web 3 is an environment in which you pay for your utility where you find it, and you retain the ownership of your data. That's the key thing, and it's trying to give people that understanding and how their data is actually valuable and how they might receive payments for disclosure of that data with privacy, etc., to provide analytics. These are all really important fundamental parts to get the adoption of Web3, distributed ledger technology going. And to get people to understand that the asset they have remaining themselves, the data they have, that's vital. The information that they uniquely are able to not information, the creativity, the intellectual perspectives that they uniquely are able to bring to the world, they're theirs. I think we look at the AI post-AI, post-DLT world, there are three things that most people will fall within. You'll either be somebody who services machines, because I think problem solving to fix machines at the say Minehead, for example, is going to remain a human activity. Or you'll work in the empathetic economy, which is somebody serving you some food or somebody taking care of you when you're ill. Or you'll be in the creative intellectual economy. I don't think we will have anything like the same number of people in low-paid manufacturing type roles, or indeed in barely keeping their heads above the waterline jobs in some sort of clerical administration type thing. And actually, I think we should embrace that. I think there is more to being human than simply being a slave to somebody else's machine for somebody else's economic benefit and your marginal survival. But coming back to this point about governance, the industry itself is the key to this. The industry is the one that needs to start championing the right way to do things. That we need to stand up and say, let's define what is distributed ledger technology. Distributed ledger technology is extraordinarily simple. It's the consensus engine that allows us to trust the message, not the messenger, securely at scale, full stop. Sadly, a lot of the better funded companies in this space are the ones who would have you think that other things are distributed technology that are not. So at every level, this has to come from this industry out. We can't wait for other people to do it for us. We can't allow well-meaning administrators in the European Commission to write to MICA, which is a retrograde disaster, in my opinion. We need to really set forth our story, and as an industry say, no, you know what, if you're not going to regulate this in an intelligent way quickly, we're going to raise the bar for ourselves and be transparent about how we're going to do it. And we're going to show people that this is the right way to do things. We're going to set the standards. We're going to do it by going beyond what is needed or expected of us.
There's a good example of that going on right now with the Metaverse Standards Forum. So it was just a completely voluntary organisation that was put together. It was recognising some of the vulnerabilities, certainly, like children who play computer games, they're now going into the metaverse. There's lots of bad actors in there preying on children. So it's all about protections. And then, well, what about protecting everybody else as well? So there's a lot of organisations signed up to say, yeah, I want to be part of this. I want input, and there's lots of little working groups going on. So you should check them out. I mean, the Metaverse Standards Forum is only one of many areas of Web3 that need these sort of groups of people. So, feel free to have a look around, see what other groups there are, or if there isn't a group for your sort of area of interest, then start one up. We'll all join it.
I don't want to be perceived as being too, I would say, pushy towards regulation, but I will just try an analogy. We are, and I like when Greg started saying we don't have that many conferences and forums where we can express in that way. Let's look at this panel and other panels. There is no moderator. But let's face it, it's going very well. Because we share, I would say 80% we share, I would say the same thoughts, we are going toward the same direction and so on. So we don't need a centralized authority to give the speech to that one or to ask for. But if it wasn't the case, if we were in disagreement, okay, let's face it, it will not go this way. It will not be that smooth. So I also see regulation again, unfortunately, as the last resort to protect people which might not be in a position to protect themselves. Okay, and yes, I wish we could do it ourselves for our industry. We failed. Let's face it, we failed, and 2022 has been a very bad year for our industry because bad actors. I'm optimistic that we could change the way forward. I don't believe MICA is the end of the story. It's only the beginning. But I think it's up to us to demonstrate, and I think Greg made the same point. It's up to us to demonstrate with trust, transparency, that we are capable of doing it. You gave the example, Charmaine, of that Metaverse consortium. I think that's what we decide to do next.
I just want to chime in here on what you're saying, Hassan. I want to say something. I want to make it very clear. We haven't failed. It's still too early to judge whether or not we've failed. A lot of mistakes have happened along the way, and that's the process. I'm very sure that when Web 2 started and Web 1 started, there were a lot of failures, there were a lot of cash grabbers, there was this same scenario sort of happening again. And I don't see how trusting the people who put us into a economic bubble every few years and have the upcoming generation in a chokehold can be trusted with an industry as complex as Web3.
I see your point. I understand your point.
So in my opinion,
I
it's
kind of
definitely.
applaud that.
Go ahead, Greg.
I think you're exactly right. You know, I do get a giggle out of seeing central bankers critique various things and then completely balls it up to the point that a whole series of banks collapse because they actually haven't figured out what the real drivers of inflation are. They haven't really figured out that just continuing to print money is going to cause a problem at some stage, that somebody one day is going to have to pay the piper. And you know what? There's a whole truckload of problems around this. You know, the really big conversation we need to be having as a society? They're very simple. What does free speech mean, and how are we going to protect it? One. Two, what is education? Because educating children to be inefficient cogs in someone else's machine is not education. They need to be educated as citizens, as actors, as people. And that needs to start from 5 all the way through to 22, 23, whatever age it is. But we need to actually educate people properly. 3, what kind of society do we actually want to live in? And who's going to pay the bill for the choices that we're going to make? Because at the moment, we're making that choice something that my great-grandchildren are going to have to endure. 4, what are we going to do about banks and banking? Because you know what? It has been proved time and time and time again that the fractional banking model doesn't work, that it's giving people virtual nuclear devices in an economic context who shouldn't be anywhere near something quite so complex or capable. We need to move to a narrow banking model. There's more than enough money in the system, and let's just stop playing games with silly ways of considering these things. It's nonsense. Fractional banking helps nobody apart from the haves. Look, I can keep going, but these are the big, big things that as a society we need to challenge, and we need to challenge the orthodoxy of thought around these things. Web3 is merely a vessel, the DLT is merely a vessel for where we're going to go in the future. If we're going to keep making the same mistakes and keep shutting people out of the conversation, if we're going to keep deciding that a very cloistered few should get to dictate the economics of everybody else, despite the fact that they've screwed it up again and again and again and again and again, I'm afraid it's not going to make enough of a difference.
I completely agree with you, Greg. And there is an ugly truth around that and around how society has become in the recent decade or two. And it is, society doesn't want to think for itself. Society doesn't want to go ahead and come up with solutions. They're too reliant on governments to come up with those solutions for them. And that, in many ways, has led us to economic crises. It has led us to having politicians who are not capable enough of running a house, not a White House, right? Going ahead and taking control of millions and billions of people, and there's no one to go up against them because, let's face it, the system in many ways is rigged. The system is a system of control, and not a lot of people are willing to wake up. We have a chance now with Web3, with decentralization. Go ahead.
The thing that is, we have to stop blaming other people for not doing something. We need to do something about it. I've tried to get involved in politics 3 times. I was talking about the future of work 20 years ago, pointing out that actually there was going to be this shift from digitization to digitalization, where we were going to remove the inefficiencies altogether. And actually, those inefficiencies tend to be human. So, this society at large needs to have these conversations with itself, and we need to have them in a way that everybody feels they can actually say what they think and not be told, oh, you said that, and we're going to make sure you don't have a job tomorrow because somebody decided to get offended. We have all sorts of problems around this, and they all come back to ourselves, we the people, the sovereign people in any democratic state. We are the ones that need to start changing things. When we are given nothing but a series of absolute clowns to vote for, we need to say so, either by not voting or by running a candidate who is a joke candidate and putting them in. Arguably, that's how Donald Trump got in. He was the joke candidate. He was the voice of dissent and fury. He was the disenfranchised having their say. And we're still not listening.
I think we'll have to close. Charmaine, you want maybe to close the panel maybe?
Yeah, so it's been a really interesting discussion, lots of variety of views. It's been really great to speak to you all. I suppose my closing words would be, it's all about education is a lifelong journey. It's never too late to learn and change your view for the better of Web3. So yeah, thank you to everybody for joining.
Thank you very much. We unfortunately lost Marina, but thank you all. It was great having